Hey, this is Noel Fielding with My Golden State Realty. I wanted to reach out to everybody and talk a little bit about getting purchase ready for 2024. The Fed just held interest rates, and this is really great news because it's been going up and up and up for quite some time, making our very expensive homes, even though things are better in the Fresno area. That's one of our big claim to fame is that our housing markets stayed competitively priced, and those higher interest rates keep people from pulling the trigger. They also prohibit sellers from wanting to part with their existing homes. So it's certainly kept the inventory low because those people aren't wanting to part with their homes in order to buy something at a much higher interest rate than what they're presently paying, and use up a lot of the equity that they've used or that they've earned over the years to do that. So, what's it mean to get yourself purchase ready? So, first time home buyers, this is going to be a lot more relevant to you than people that have maybe gone out and purchased a home in the past. But it's still important to know how to maximize your situation. And having a great FICO score is one of the first things that you can do. I've had a number of clients in the past who felt like they were earning enough money. Their life situation with having children or whatever created a need or a desire to own a home. Uh, even just the feeling that when you're paying rent, that's money that's going into somebody else's pocket, are arguably in the way of uh, income because you're paying more than what they're paying for the house, or just also in equity. You're paying down their mortgage for them rather than doing it for yourself, and that equity is money that is something you can recapture in time for retirement or other purchases or uh, relieving debt, all kinds of things. Equity is great for. So getting a great FICO score is really a big deal, and there's a lot of ways you can do that. First of all, having credit is probably paramount. You need to have some active credit. So there's a lot of people out there under the misconception, no credit's great credit because I don't need credit. Well, someone's about to lend you theoretically hundreds of thousands of dollars, and they want to know that they have a prospect, a client that has the ability to repay that loan, and showing an level of experience in managing your bills and paying on time is an important part and what generates a good FICO score. So having credits again paramount. I think having multiple trade lines. It's one thing if you have one credit card with a $500 limit and you hardly use it. It's better than none. But having 3, 4, 5 trade lines where you've had a car payment and you have a couple credit cards, but also not abusing them and putting yourself in a situation where your level of payments is heavy and hard against the amount of money that you earn. And that's going to also show up in your debt to income ratio. So listen, what I would tell you to do is have uh, several trade lines, use them over and have them for a couple of years. So if you don't got any, start now. And even with a secured credit card, works at the bank, because it won't be secured forever, and then it will be an unsecured card and really start generating good activity on your credit report and generating a higher FICO score. But if you're making, listen, buy a sandwich, make sure you're using it, right? And then pay it off at the end of the month. You're not going to pay any real interest on that. So make sure you're generating a good positive activity. Anytime you use a 50% or more of your available credit. So let's say you have a $5,000 credit card and your balance on that is more than $2,500. You're going to get credit for the payment, but you're also going to get hit a little bit for having for showing what looks like you need that credit. So having it and needing it are two different things. So managing your credit, and when we get into this, we'll get you with a loan specialist. This used to be my specialty. I was a mortgage guy for many, many years. A lot of things have changed since I did it. So we'll get you in and get you looked at. Once we are getting close, a few months out before you're ready to actually buy, we want to go in and get you pre-qualified. But these are some steps that you can take in the meantime to get you ready for that. So having some trade lines, having some a little bit of usage on there, but managing them and not letting the debt become a number that's worrisome to the lender, because it is all about risk evaluation. So those are a few of the items that you can do as far as getting your FICO purchase ready. And we want to get above 700. If we can get you to 720, you are freed up to a lot more loan programs. And because of your good credit, you get better interest rates, and you're going to become, your home's going to become more affordable. Even a little bit of interest can add quite a bit to your payment. So we want to definitely manage that. So that's what's really one of the first things that's going to be important to it.